Good morning, America. If you've been keeping an eye on global finance, you've probably heard whispers about the Chinese Renminbi, or RMB, inching its way onto the world stage. It's not just some exotic currency anymore. It's becoming a player in international trade, settlements, and even reserves. But the big question floating around is this: is the RMB already functioning as a true reserve currency? You know, the kind that central banks around the world stockpile to stabilize their economies, pay for imports, and hedge against chaos. Think of it like the US dollar's role since World War II: safe, liquid, and trusted globally. Well, let's dive into this, because what happens with the RMB could reshape everything from your retirement portfolio to the price of goods at Walmart. First off, let's clarify what a reserve currency really is. It's not just any money. It's a foreign currency that central banks hold in significant amounts to facilitate global trade, manage exchange rates, and act as a buffer during economic storms. These currencies need to be stable, widely accepted, and backed by deep, open financial markets. The US dollar has dominated this space for decades, holding about 56 to 58% of global reserves as of late 2025, according to the latest IMF data. The euro comes in second at around 20%, followed by the yen and pound. But the RMB? It's been climbing, albeit slowly. As of the third quarter of 2025, it accounted for just 1.93% of allocated global foreign exchange reserves, a tiny slice, down slightly from 1.99% in the previous quarter. That's according to the IMF's Currency Composition of Official Foreign Exchange Reserves report. So on paper, it's not due mid-reserves yet, but dig deeper and you'll see signs that it's starting to behave like one in key ways, especially in trade and bilateral deals. Take trade settlements for starters. This is where the RMB is making serious waves. Back in 2010, RMB settlements in China's cross-border trade were basically zero. Fast forward to 2025, and the numbers are staggering. The People's Bank of China reported that cross-border RMB settlements for goods trade hit a cumulative 118,094.55 billion RMB by the end of the year. That's over $16 trillion in US dollars at current rates. Monthly figures show goods trade settled in RMB reaching 1,470 billion RMB in December alone. As a share of China's total goods trade, RMB settlements jumped to 34.48% by year's end, up from around 30% earlier in the year. That's a quadrupling since 2017. Why does this matter? Because when countries settle trade in RMB, they're essentially holding and using it as a medium of exchange, which is a core function of a reserve currency. Look at specific partnerships. With Russia, annual RMB settlements topped $225 billion in 2025, driven by sanctions that cut Moscow off from dollar markets. Brazil clocked in at $150 billion, Saudi Arabia around $70 billion. Even in Africa, where dollar shortages are chronic, countries like Zambia are shifting. In a landmark move, Zambia agreed to collect mining taxes and royalties in RMB from Chinese-operated mines, using those funds to buy Chinese goods and service loans. It's practical. Zambia lacks dollars. China has plenty of RMB, and it cuts out the middleman costs of converting currencies. Analysts see this as a template for other African nations. Think Nigeria, South Africa, or Angola, where Chinese investment in infrastructure and resources is booming. By the end of 2025, over a dozen African countries were exploring similar setups, according to reports from the African Development Bank. This isn't happening in a vacuum. The BRICS group, Brazil, Russia, India, China, South Africa, now expanded to include Egypt, Ethiopia, Iran, and the UAE, is pushing for alternatives to the dollar system. At their 2025 summit, they discussed a common payment platform using member currencies, with RMB as a key pillar. It's about building financial independence from Western sanctions and SWIFT, the global banking network dominated by dollars. For sanctioned countries like Iran or Venezuela, RMB offers a lifeline. But even non-sanctioned players are jumping in because of dollar shortages. The US runs massive deficits, over $1 trillion annually, and to finance them, it offers higher interest rates, sucking dollars back from global banks. That leaves emerging markets scrambling. China's lower rates and abundant liquidity make RMB an attractive alternative for trade with the world's second-largest economy. Now, let's talk about those currency swap agreements, which are like emergency credit lines between central banks. The People's Bank of China has been aggressive here. As of early 2026, the PBOC has active bilateral swap lines with over 40 central banks, totaling more than 3.7 trillion RMB, about $550 billion. These swaps allow partner banks to borrow RMB instantly in exchange for their local currency, providing liquidity during crises. Renewals in 2025 and 2026 include deals with Canada, 200 billion RMB, the European Central Bank, 350 billion RMB and 45 billion euros, Thailand, 70 billion RMB, and Argentina, extended to July 2026 for $5 billion equivalent. These aren't just symbolic, they're used. For instance, Argentina tapped its swap line multiple times in 2025 to pay for imports and stabilize its peso amid inflation woes. What does this mean for the RMB's reserve status? Well, these swaps create on-demand RMB reserves. Central banks don't have to hold physical RMB stockpiles. They can access it when needed for trade or payments. That's a step toward reserve-like functionality. Plus, with over 3.4 billion digital yuan transactions processed by late 2025, worth 16.7 trillion RMB, the ECNY is accelerating this. Projects like mBridge, a China-led cross-border digital currency platform, saw transactions surge to $55 billion by early 2026, with RMB dominating 95% of volumes. It's testing real-world settlements for trade, especially in energy and commodities, where China is a major buyer. But is it truly a reserve currency yet? By the strict definition, held in large volumes by central banks for stability and liquidity, the answer is no, not fully. That 1.93% global reserve share is peanuts compared to the dollar's 56%. The RMB isn't fully convertible. China maintains capital controls to prevent outflows, which limits its appeal as a safe haven. Markets aren't as deep or open as New York's. And trust? Many countries hesitate to hold large RMB reserves due to geopolitical risks. Beijing could restrict access, just as the US did with Russian dollar assets after Ukraine. Yet in practice, it's functioning like one in pockets of the world. For trade with China, now the top partner for over 120 countries, the RMB reduces exchange risks and costs. No need to convert to dollars first. This is huge for developing nations facing dollar droughts. Take Asia. Countries like Pakistan, Indonesia, and Malaysia are settling more in RMB, with Pakistan even using it for oil imports from Russia via Chinese intermediaries. In South America, Brazil's central bank has RMB as its second largest reserve after dollars. Saudi Arabia is discussing RMB oil sales, potentially chipping away at the petrodollar. For the US, this matters big time. The dollar's reserve status gives us exorbitant privilege. We borrow cheaply, sanction effectively, and influence global finance. If RMB gains ground, it erodes that. American companies might face competition from Chinese firms offering RMB financing, like that elevator maker in Foshan settling 30% of overseas sales in RMB. Buyers in dollar-short markets can opt for Chinese goods without scrambling for USD. Over time, this could mean higher US borrowing costs if demand for treasuries dips, or reduced sanction power if countries bypass SWIFT via China's CIPS system, which handled over $100 billion daily by 2025. Look at the elevator example. Siglin Elevator's global sales director noted they compete against Otis, Schindler, or Mitsubishi by accepting RMB. In dollar-type markets like Africa or Latin America, that's an edge. Chinese firms in EVs, solar panels, or machinery could dominate, displacing US exports. And with BRICS pushing de-dollarization, the RMB's role grows. In 2025, RMB payments via SWIFT hit 4.5% globally, up from 2% in 2020. Still small, but trending up. Critics say this is overhyped. RMB internationalization has stalled before. After 2015's stock crash, China tightened controls. And with US rates high, dollars remain attractive. But data shows momentum. RMB trade finance grew 11% in 2025 to nearly $2 trillion. Panda bonds, RMB-denominated debt issued by foreigners in China, surged, with issuers like Hungary and Egypt tapping in. So, is the RMB a reserve currency? Partially, yes. In trade settlements and swaps, it's acting like one for China's partners. Globally, no. It's not displacing the dollar anytime soon. For Americans, it's a wake-up call. Diversify holdings, watch trade policies, and push for US innovation to stay competitive. The world's financial map is shifting, and the RMB is carving its path.